I'm Craig Timm, and this is ACAMS Live. Thank you so much, everyone out there, for joining today. Feel free to say hello in the comments. Let us know where you're tuning in from. If you have any questions, you can put them in there as well. We'll try to get to them if we can. But today we're going to talk about fraud. And fraud is exploding everywhere. It was the number one threat in the ACAMS 2025 Global Threats Report because of both the increasing scale and sophistication of the criminals that are executing these frauds, but also the huge challenge it's posed for governments in trying to respond. And I think it's fair to say that no country has quite gotten this all the way right. And that's why it's so important for us to learn from the experience of others. And that's exactly what we're going to do today. So I'm joined by Chris Sheehan from Australia. For the past 6 years, Chris has led National Australia Bank's Group Investigation and Fraud Business Unit. They're responsible for the prevention, detection, investigation, analysis, and remediation of financial crime and fraud across the NAB Group. Prior to that, he spent over 27 years with the Australian Federal Police. So, Chris, thank you so much for being here today.
Thanks, Craig. Thanks for having me on.
Well, let's start by just setting the scene in Australia. Give us a sense of what the fraud landscape looks like there.
Look, we're not that dissimilar to the rest of the world. So we face many of the same challenges. From a banking perspective, we have card fraud, we have digital fraud, we have people who try to steal money from us through lending fraud, either secured or unsecured lending. Those traditional fraud types are still there. We're certainly seeing growth in card fraud at the moment. But I think the number one issue that really impacts our customers and is in the centre of government thinking, regulator thinking, industry thinking is scams or authorised push payment fraud. That has exploded over the last 3 years. It was starting to happen pre-COVID, but I think COVID certainly tipped kerosene onto that fire, and it has exploded ever since then. And so, we're seeing the regulator will say that Australians lost $2.7 billion to authorised push payment scams of different kinds last year. We would say that number's maybe a little bit high, but is still a very, very significant amount of money. We're starting to, I mentioned card fraud earlier. What we're starting to see now is the emergence of card scams where people are being socially engineered into using their credit cards and debit cards to purchase crypto to then send to scammers. And so that centrality of crypto, that centrality of digital technology to what is really a fraud epidemic is undeniable.
Yeah, you mentioned governments, and I think that's, I think scams everywhere are exploding. And I think governments are feeling a lot of pressure to do something, to take some action. And different governments are taking different approaches. I'm wondering if you can tell us a little bit about the approach from the Australian government, and then, how that compares to anything else you've seen out there.
Yeah, no problems at all. Look, the Australian approach is probably unique. I've been fortunate enough over the last couple of years to travel to the UK, to London. I was able to attend the Economic Crime Congress there last year and have a bunch of meetings with banks and others, regulators, government. I've been to Singapore to look at what they're doing in Singapore, and they're probably the two models that are being most commonly spoken about, certainly in media here in Australia. The Australian government has taken a different approach. It doesn't agree with the UK mandatory reimbursement model. So what the Australian government has done is they've focused on this from a prevention perspective and at an ecosystem level. And what I mean by an ecosystem is the Australian government has taken the view that the vast majority of scams originate either on a digital platform, a technology platform, or via a telecommunication service. So people are seeing a fake investment ad on Google or Facebook, or they're getting a text message or an SMS or a WhatsApp from a telecommunication service. And that's what's hooking them. That's the fish. That's what's hooking them into the scam. And the banks are at the end of that transactional kill chain, I suppose, that scam's value chain, if you want to call it that, is where the transaction is made. So our government's view is that this is an ecosystem. Every part of the ecosystem has a role to play. And therefore, every part of the ecosystem needs to have obligations, which if they do not meet those obligations, they need to be liable for customers, consumers' losses from scams. So That's the approach the Australian government has taken. Legislation went through the Parliament earlier this year in February, was passed. The legislation is very much principles based. What will follow this year are mandatory codes, regulatory codes, and rules for how the codes and the legislation will operate. Essentially, what they'll do is, from a banking perspective, they will set minimum standards that banks must achieve to protect their customers. And if you do not achieve those minimum standards, you will be at least partially, if not fully, liable for your customers' losses. So it's a very different approach to, say, what's been done in the UK or Singapore or elsewhere.
Interesting, but I like the approach of addressing it where it starts, right? It seems like, that really has to be part of the solution. These schemes and scams are originating on these platforms. If they're not part of the ecosystem, if they're not part of the conversation, you're never going to have the impact that you should. So I think that's interesting.
No, you're right. It is interesting, and I completely agree with an ecosystem approach. That doesn't mean it's going to be easy.
Right.
People on this call have been around the block a few times. Being very honest, I think our telecommunications providers, given that they are Australian-based companies with operating under Australian licenses, they can be regulated, and they are probably more willing to come to the party and be contributors to this. I think we are inevitably going to find real challenges trying to bring the big transnational companies like Meta and Google to the table and accepting of their obligations and potential liabilities in this space. So it won't be easy, but if you think about this from a principled perspective, I think it's the right way to go. And I like the focus on preventing the scam happening in the first place, as opposed to just dealing with the after effects.
And just wondering, you mentioned that there's still, the sort of details are still left to come. Is there anything you're doing or you recommend doing to sort of operationalize what's coming now? Or is it really just more of we've got to sort of wait and see, the devil's in the details?
Look, that's a great question. You certainly just can't wait and see, because scams are not going to stop, fraud's not going to stop whilst you're waiting for government to share consultation drafts of codes and rules and that sort of thing. We've been pretty proactive in the banking industry. So through our industry association, the Australian Banking Association, and the Consumer-Owned Banking Association, which looks after the smaller banks, we've signed up to an industry voluntary code, which has committed us to doing a whole bunch of things around having a strategy in place for tackling scams, having real-time payment monitoring and the ability to detect bad payments and hold payments in real time, having confirmation of payee in place, and a bunch of other really proactive measures. So we're all doing that already. And then at an individual banking level, there's a bunch of stuff that we've had in the pipeline and have been progressively delivering. So real-time payment alerts, the ability to see as many payments in real time, and if they look suspicious, hold them so that because once the money leaves your bank and leaves your customer account, you've got less than a 10% chance of ever getting that money back because it moves so quickly. So all of that sort of stuff, that doesn't stop. You have to keep going. But we can kind of surmise from the way the legislation is drafted and from the conversations we've had from government around what some of this is going to look like. Certainly sending and receiving banks will have liability. So if you have mule accounts in your bank and scam funds move through those mule accounts, you're going to have some liability here. If you're not in the position to monitor in real time payments by your customers who fit within the legislation and stop payments in real time across every payment channel where they use, you're going to be non-compliant with the legislation. So we already have some idea around where this is going to go. And
I want to pick up on a couple of things you said there, because I think there's a couple of really interesting things that people can learn from. First is the sort of technology angle, and there's a question in the comments from Raul about that. And second, I want to get the money mules too, because especially as the receiving bank, you're not going to see any of that fraud, right? It's just going to look like money laundering. So let's start with tech, real-time payments. We hear a lot about AI, about machine learning, about all of the new tech. How are you trying to think about how are you leveraging tech today? And then how are you thinking it over the near term in terms of helping you, operationalize some of these changes that are coming?
Great question. And anyone that works in this space will know that this is a really complex, difficult, costly, time-consuming thing to address. So we are actually replatforming our entire fraud technology stack at the moment. That's been a project that's been ongoing for nearly 4 or 5 years now, with a native built product, which we are very close to finalising, probably 12, 18 months away from having it completed. So that's my first point. You have to have the right platform. That platform has to be able to host dynamic rule sets and models, because you need a hybrid combination of rules so that you can react to emerging threats and trends, and models so that you're being as efficient as you possibly can be, minimal customer impact, maximum safety. So you need to do that. Everything has to be, and this isn't. I think banks broadly have been a bit slow to realise this. Our consumers, our governments, our commerce sectors, everyone wants to move and operate in a digital economy, but that means things happen very, very quickly, and your decisioning time is as a result much shorter. So you need to be able to operate, to think, to act in real time. So we're moving as rapidly as we can to get payments into payment channels where we can do real-time monitoring, real-time disruption, holds, declines, intervention, because that's the only way we can keep our customers safe. You have to have that balancing act right in your mind between losses and customer impact, customer experience, and cost, because everyone that works in fraud knows that's a bit like the old-fashioned graphic equalizer. If you pull down on one, it's going to pop up somewhere else. So you need to get that balancing act right. Technology can help with that as well. But I think the number one thing I'd say is we are now focusing on building systems, processes, training for our staff, the human capital that are critical to all this. That's very much focused on prevention and stopping the bad thing happening in the first place. Because once that scam happens, not only is it unlikely we'll get the money back, but there's a very long operational cost tail associated with that in terms of case management, recoveries, potential litigation, regulatory reporting, and under this new framework that's coming in, really significant liability and very severe, very, very severe civil penalties, $50 million penalties for each breach of the code and the legislation. So everyone's attention's laser focused on getting this technology position correct.
Yeah, that prevention mindset I think is really interesting, and it's a shift. I think banks have always been good at preventing fraud against the bank, but from a fraud against the customer, it's often been more of a money laundering approach where we find it afterwards, we report on it, we do what we need to do. But if you're actually going to make a difference and help the customer, you've got to get more in that prevention mindset. And I think that's a shift for a lot of people.
It is, and you said something there, Craig, that is spot on. So we've looked at fraud, whether it's against the bank or anyone really, but fraud against the bank. The number one lens that has historically been viewed through is a commercial lens. We accept that we're a bit like a major department store or a supermarket. You accept that there's a certain proportion of loss that's going to occur every year, and you factor that into your business plan. What's happening now with the legislative approach that governments around the world, certainly ours, are taking to scams, and it will necessarily flow through to fraud, is that for the first time ever, scams and fraud are being viewed by government through a legislative regulatory obligations lens, exactly the same as financial crime. If you look at our legislation, you can see the AML, any money laundering, counterterrorism financing act, you can see the DNA of that all the way through the scams legislation in Australia. So that tells you something. That means that, and it's going to be a mindset shift for banks and for senior executives, because all of a sudden you don't get to apply a commercial lens to this. The first thing you need to apply is, are we compliant with the law? Are we breaching the law? We're used to that in the financial crime world, money laundering world. We're not used to it in fraud and scams.
Yeah, if you're not compliant with this new law, there is no acceptable level of losses, right? That's it. Compliant or you're not.
Correct. Yep, spot on.
So let's talk now about, you mentioned it in an earlier comment about money mules, and really, it's hard. We sometimes split fraud and money laundering, certainly within institutions, but really the two are inextricably intertwined. So I'm wondering, and especially when you think about, how you're going to detect this down the payment line, tell us a little bit about, what you're seeing in terms of money mule activity, and then how you're going about trying to better detect that.
Yeah, you're right. We have sort of separated fraud and financial crime, but actually the linchpin, one of the main linchpins that bring them together is mules, because I think certainly from my bank's perspective, historically, we've looked at mules as a fraud problem, but it's not a fraud problem. It's a financial crime problem. It's a money laundering problem. Mules by themselves don't go out and commit a predicate offence. Mules facilitate the movement of illicit funds that are derived from predicate offences like fraud, scams, drug trafficking, human trafficking, you name it. So that's the linchpin. What's interesting, what we're seeing in Australia is a shift. So we still see mules who are established in banks using identity takeover techniques, everything from counterfeit identification through to stolen identity. That still happens. But the growing trend is of either vulnerable customers, increasingly scam victims who are being tricked or coerced into allowing their accounts to be used. And the really significant one that we're seeing now, I know this is a live issue in the UK. It's been going on there for a long time. We're just catching up. But really sophisticated criminal professional facilitators who are recruiting groups of people who are genuine people, real people, who are using their own identity documents to go out and establish bank profiles and accounts within institutions, which are then subsequently used for money laundering. And that's a real challenge because we're building really sophisticated onboarding controls, which will make it not impossible, but much harder for those but those traditional identity takeover, stolen identity, synthetic identity means to get into the bank. And I'm, touch wood, pretty confident that give us another 12 months and we'll have a pretty narrow doorway there that people will have to try and squeeze through. But if people are using if it's a real person and they're using their own identity, detecting that before illicit funds start to move through those accounts, that's a real challenge that we're grappling with at the moment. And we're tackling it in a range of ways. Banks have a lot of data about people, and it's can you harness that data? Are you seeing duplicate profiles or matching selector information, phone numbers, email addresses, that sort of thing? And can you use that data to try and identify potential mules? We're using some pretty sophisticated behavioural biometric technology. So we're a very significant user of BioCatch, and they've been fantastic for us, and we're seeing some real benefits flowing through from that. You also have to be really good at suspicious inbound payment detection. We do the outbound payment stuff, but the focus now, we have to look at suspicious inbound payments as well, because that's the finger pointing at a mule account if you can get that right.
Yeah. The one thing I think, look, we could talk all day, but we're running a little bit low on time now. But the one thing we haven't talked about is that I think is a key part of this is public-private partnership. And I know there's a lot of really interesting things happening in Australia with AUSTRAC, with the Fintel Alliance. Australia has really been a world leader when it comes to these public-private partnerships. Tell us a little bit about how that's working for you today, what you're seeing being done in the fraud landscape.
Yeah, look, I do think we're leading in Australia, although I was really encouraged when I was in London late last year by what's happening and has been happening for a long time in the UK. I think the UK does a great job on this as well. I would also like to think that our, probably being a bit cheeky here, but spruiking for NAB, I think we're leading the industry on this. We have had a formal memorandum of understanding with the Australian Federal Police, the Queensland Police, and the Australian Criminal Intelligence Commission for some years now. We're embedded in task forces with those organisations. I have security cleared people so that they can operate in those spaces. And we get obviously exposed to some really valuable intelligence and information and can contribute to some great operational results for Australia on behalf of that. My personal view is that public-private partnerships are the future. It's critical. If we're trying to tackle these let's look at it this way. Fraud and scams is volume crime, so large volume crime targeting Australian citizens, but it's kind of unique in the history of crime in that the vast majority of that volume crime is not being driven by the person who's breaking into your house or your car and stealing it. It's being driven by transnational organised crime groups who are based in multiple countries around the world, with perhaps affiliates based in Australia who do the legwork, setting up mule accounts, moving funds around and that sort of thing. No bank can deal with that problem by themselves effectively. No law enforcement agency can deal with that problem by themselves effectively. But if we bring our data, our capabilities, and our intelligence together, we have a much better chance. They're organised criminals. We need to be organised as well. And not just between government and the private sector, cross-sectoral as well. Partnerships between telcos, banks, partnerships between banks and digital technology companies. All of that has a role to play.
Yeah, before I let you go, one more question has come in, looking for a little bit more practical, or to expand on one of your earlier questions, digging a little bit deeper. And they're just wondering, in terms of real-time monitoring, anything you can share in terms of parameters that you're looking at, things that people out there should be considering as they're moving to more real-time monitoring like you described.
Yeah, look, I hope I can answer this the right way, in the way the person wants. But attributes are important. So things that and I don't want to give a playbook to crooks, so I'm very
Yeah.
cautious around disclosing too much. But we look at things like non-monetary behaviours. So where is the person who's involved in the banking session logging on from? Does it match where they normally log into their banking session from? Device information. How are they using their device? Does it look like it's the person, or does it look like a bot who's filling in the application form for a loan, or who's completing the transaction? Does it look like someone might be confused or being coerced or coached? And so the technologies that we use can detect that sort of thing. Is the spending that or the transaction the person's trying to conduct in line with their normal pattern of spending? Someone just has their normal day-to-day living expenses coming out of their transaction account, and all of a sudden they're trying to make a $50,000 payment to an account that's overseas. That should flag, and that's pretty blunt force example, but that should flag concerns, and you need to intervene in real time. The difficulty with that real time approach, one of the challenges that we're all going to have to grip up, is it's not cheap. Because if you're holding and declining a payment, that is going to generate an inbound call or cause you to make an outbound call. And that requires people, and people are expensive.
Yeah, and the one other thing I'd add that just for Raul, who asked the question, that I've been encouraged by is I've seen more sharing of these attributes amongst financial institutions. So we obviously don't want to get into a whole lot of detail around specifics today, but I've been really encouraged. I've seen more banks willing to share, this isn't customer information. This is just, what are the specifics? And I think that's really key too, right? Like, if you've got a good idea, how can you share that within your public-private partnership, within your groups in your country, to sort of better tackle this?
That is 100% correct. So I can speak on behalf of myself and my peers in the other major banks in Australia. We're intense competitors when it comes to commercials and selling products. But in the fraud scams space, we don't compete with each other. We collaborate, and we do exactly what you said then, Craig. We share ideas, thoughts, strategies, rule settings. Now, obviously, everyone's got a slightly different fraud technology stack, so you have to tweak that to fit your own capabilities. But we don't let other people be victimized because we've got a better rule set than someone else. We absolutely share all those capabilities with each other. And in fact, we've actually enabled joint capabilities. We're all members of the Australian Financial Crimes Exchange, sharing fraud and scams intelligence with each other. And a lot of us have signed up to Bycatch Trust, which is real-time payment data sharing from the sending and receiving banks. So what that means is another bank is sending money to me. They'll get telemetry that says, hey, that account that money's going to, it looks like it might be a mule account. Do you want that payment to go or not? So that's where our heads are at. It's really about collaboration.
Well, Chris, this has been really great. Thank you so much for being here today. I really appreciate it. For those of you out there who are looking to dig more into this, we can only really scratch the surface into some of this. ACAMS has a load of fraud resources, so I'll go ahead and put a link in the comments to our fraud hub. That's sort of the central spot where you'll get links to webinars, white papers, publications, news articles. You can hear about our new certification, certified anti-fraud specialist. And we also have a new fraud watch, which is a monthly 30-minute webinar that will get you up to speed on the latest fraud news and trends from around the world. So please, if you want to learn more, if we whet your appetite today, please dig in there. Thank you again, Chris, and thank you to everyone out there for joining, and we will see you again on ACAMS Live.